Welcome to TradeTheMBA.com. This is John's reports for the 28th of April, and look at where we're at. Right back to the 50%. We actually broke above it, consistent with what we had from the MBI Magenta leading on the MBI indicator here. But you can see that we're already pretty well accelerated within the move, and just barely reaching 50%. And that's why things sort of slowed down. We still didn't have that steel reset here on the DOC, which would give us the impetus to really drive things. But is potentially getting closer to actually, dipping below here on the cyan, and that would give you the reset that we need. All the other configurations from my configuration have been set with the orange dipping below red, and you can see green and red both rising. Those are all good signs, but you got to have that push that takes you here on the shakeout readings all the way to the positive. And until that happens, you're still at a broader negative run. Yeah, but you move back up to the zero break that took place at the beginning of March. So all in all, things have leveled out from the whole tariff freak out storm, which has really proven to be much of nothing. It's still a political gamesmanship at this particular stage, and the market is taking advantage of that. They know better, and they're just doing it on purpose. And you get the crazed theories as to about what's going to happen with it. But at the end of the day, um, people want to trade the U.S. and they're going to have to do what it takes. So get past that one, and then you can complain about all the other items. And of course, this whole inflationary theory suggests that you have no other products to buy, and that's just never been the case. Now, what's interesting to me when I look at this, though, from a treasury standpoint, is where yields are at right now, and then you see what's happening with the dollar. It doesn't make a whole lot of sense because you get a far better yield being in the U.S., especially now that they've devalued the dollar relative to other currencies. So why wouldn't you want to be buying into U.S. treasuries? Because you look at the Eurozone and these other locations and you're like, well, they've lowered rates because their economies are in such bad shape. So what's the incentive being in those currencies? None. From an oil standpoint, still stuck. It's better than it has been, but still not great. Really needs to see that drive lower. And if it's not going to make much of a move, you're going to have difficulties. At least Trump will be getting what he wants from a tremendous growth standpoint. You'll just have that more staggered kind of like modest growth. This is what I was talking about the euro. I mean, from a euro standpoint, of course, you get this huge increase in the value of the euro. Well, you can just buy more dollars, more treasuries, get a better yield than you're getting in eurozone. It's talking about another quarter cut coming up. What's the justification for wanting to be in a euro? It doesn't make a whole lot of sense. But again, this is about the politics of it, and trying to get some maneuvering capability. I mean, this just discounted, the tariffs that are being charged in a broad aspect of it. So, made up for part of the whole dynamic that's taking place is kind of a joke. Gold still holding up, and it's going to stay that way as long as oil isn't in a fade mode. There's still more room for gold to the upside, though. You can see we're just about reached that DOC spread here, where shorts finally taking the lead on it. So we could see a little bit more of a fill of positive extremes. Just a little bit ways to go for this last breakout, but then you just have a couple from going back all the way as early as this breakout here from the 3100 range. Yeah, we'll see if it takes place. It's not that critical at this particular stage. It's still at an upward bias because of the current setup of where the situation is. Bitcoin has been rising as they have returned back to their favorite for parking. You can see it's far better move than you would see from the S&P or even from the Nasdaq. Well past its 50% Morgan Hutching lines right here, and that's part and parcel due to just the suspended nature that it's was quite a while in this basing area. And it's not something that's been shared by ETH. They really struggled because of utility issues and some of the program changes that they're trying to adopt in that. But it shows that they're going to start to be more winners and losers from the crypto space. And it's not just this blanket buy until you're, spent out with all of your crypto purchases. Zooming in here for 50K, look, it was a pretty benign day. I mean, modest dip down. We had the MBI weight spike, Still with Magenta leading though, so until the Magenta breaks down, you wouldn't see any move towards that 50%. So, all in all, things are pretty relatively flat going into the start of things here. But it's going to pick up because we've got the end of the month and then you're going to have new fund money coming in. So if it's able to hold up for the next couple of days, then we should see a boost coming in at the start of the month. And that will start to drive things. And we're starting to get some real data how things are changing. And that will be an important one, particularly as it relates to government spending and everything else, whether or not Doge is actually making any impact, which don't know that it's all going to be that significant, but at the end of the day, perceptions are what drive narratives, and that's what everybody looks at. So we just keep following the readings because it pretty much tells us where things are headed. From an intraday standpoint, you can see it was kind of blah rocky. We had a couple of little pops here that then filled back to the 50% move and came. So that was all pretty much normal, and then you just fill it back in post market. We would have to see them dip down to the 55. We'll grab that right there. We go. Just like that. And for those that like to follow the details on Skype and that, I've set up the Microsoft Teams, but also have set up Trade the MBI website. We'll have the video reports on its cover page, so you can go to tradethembi.com and be able to see it there. I think for next video, I'll put that one up there so you can see what that looks like on the homepage, and that'll make it easy for anyone who wants to get a hold of the video reports if they're not going to join the Microsoft Teams, which spent some time setting that thing up. It was fun. As always, though, anything relevant, I'll put it on the Skype chat for now until we switch over, but have a good one. Trade well.